Hi there, welcome to Neppy Invest. Today, or in this video, I'm going to look at MicroX's Appendix 4C for the third quarter of financial year 21. Now, I am quite excited about this company, but even though I'm excited about the company, I haven't taken a position just yet. And the main reason I haven't taken a position is just not only am I excited about the company, I think the overall market is excited, and we have seen the valuation of this company get to some lofty heights, and I'd love to see the share price pull back so I could take a position. So I'm being a little bit selfish. So if you are a shareholder of this company, I'm sorry, I'm being selfish and hoping the share price goes back a fair bit so I can buy some shares of this company I do like. So anyway, let's get into some of the facts or background in relation to MicroX. And the ticker code is MX1, one of my favorite ticker codes on the ASX. In fact, I like any ticker code with a number in it. For some reason, I'm attractive to that. Maybe it's because I do prefer numbers over letters, and I also love the letter X. So this has a lot going for it. And of course, M, Michael, that's another reason I love this company, MX1. It's not a reason to buy into a company, a ticker code, but it's definitely a reason you can, like a company. Anyway, market cap 159 million. I love to see that pull back a bit. Now, in saying their market cap's 159 million, they do have a fair bit of cash on hand because they did do a capital raising in the quarter, which raised their cash on hand by something like $20 million or so. And not a lot of revenue at the moment, so only $5.8 million in revenue in the trailing 12 months, and they are bleeding a fair bit of cash. So they lost $11.7 million of cash during the last year, and that's another reason they need to do a capital raising to increase the cash because they are burning through a lot of cash. And when I look at the price to sales ratio, only 27, so it's not too lofty. I've seen some significantly higher than that. But I think the main thing with MicroX is they need to increase the cash receipts, the revenues, and try to pull back on the costs because you don't want to see the costs increasing at a greater rate than the revenue. If you do want to look at their Appendix 4C, they released it on the 13th of April. And I did do a video on this company 3 months ago, and I did go into greater detail of what they do. So I'll leave a link to that video in the descriptions of this video. And something I forgot to do on the first run through of this video is to explain what MicroX does as a business. And that's a very important point because if you don't know what a company does, there's no reason to buy into that company. Although, in saying that, in this age of speculation, I say actually wild speculation, euphoria, people are buying into SPACs in the United States when they have no idea what that SPAC is going to actually invest into. So people are buying into companies, SPACs, without any knowledge of what the company is going to invest into. And I think that's just ridiculous. Why would you do that? Why would you buy into something, put your money into something where you don't know what it's going to be doing in the future? It's ridiculous and rad. So what does MicroX do, and why am I excited about this company? So the best way to describe this company is they design, develop, and manufacture ultra lightweight mobile X-ray imaging devices or machines. And you can just think of, a nursing home, someone is sick there or they've fallen over, and you can take this X-ray imaging device straight to the nursing home instead of taking the patient or the elderly patient to the hospital, and it's much less stress on that patient. So you can just see the benefits and applications for lightweight or ultra lightweight mobile X-ray imaging devices. So a lot of applications in health, and not only in health, we're also seeing possible applications in security. For instance, they do have a deal to try to develop a prototype of an X-ray device that can detect minute explosive particles, and you can definitely see that sort of benefit if a machine can detect minute levels of explosive material in electronic devices. So that's the reason I'm excited about MicroX, and definitely can see a long runway ahead for this company. The first thing I always go to when I look at Appendix 4C is the cash flows from operating activities, which is section 1 in the Appendix 4C. And the first thing I always have a look at in this section is the cash receipts or receipts from customers. And for MicroX, it was 963,000. It was probably a little bit lower than I was expecting. So I was hoping the market was expecting a higher number than that. So I was hoping the share price would pull back. They are still bleeding a lot of cash. You can see the net cash flow outflow in operations was $1.1 million for the quarter. And that actually was helped by government grants and tax incentives, which was $2.1 million for the quarter. Now, you could argue, and I'd probably agree with you, that maybe government grants and tax incentives shouldn't be put into the operating activities section of the Appendix 4C. Maybe it belongs in the financing section, and I couldn't argue against that because it can sort of distort the real cash flows or outflows in operations for a company. In most of the videos I do in regards to Appendix 4Cs, I skip cash flows from investing and financing activities because largely there's not much information in that. But for MicroX, there was a fair bit of information when you look at the cash flows from financing activities because they did do a capital raising during the quarter. In fact, they raised $34 million for the quarter, which means that did lead to generating cash of $26.96 million for the quarter. And with that extra cash, they were able to repay back some loans, $5.2 million. And that's actually a big positive in my books because I don't like companies like this having too much loans they have to repay simply because sometimes the interest rates on those loans can be exorbitant. I've seen interest rates as high as 20% for loans in regards to small cap companies. So even though we're in an low interest rate environment, not all companies are experiencing repaying back loans that have low interest rates. In fact, in every Appendix 4C, you'll see a loan details section, and they do have a South Australian Government Financing Authority secured loan facility that does have an interest rate of 6.75% that has increased to 7.75%. So even though we're in a low interest rate environment, still have companies paying back that sort of interest rate on their loans, which is another reason why it's really good that companies like MicroX are repaying loans. My favorite thing I do when I look at Appendix 4C is I take the cash receipts for the quarter and then compare it to the long-term trend. And when you do that for MicroX, you can see the long-term trend is up. We do see a bit of lumpiness here. You can see April 2020, they only had about $2,000 in receipts for that quarter. And then the next quarter, they had $1.7 million. So very lumpy when it comes to receipts, but they are growing. The overall trend is up. And that's the main thing when I look at the receipts history for a company is making sure there is an upwards trend in receipts. Ideally, I'd like to see an exponential growth in receipts. We're not quite seeing that with MicroX. They're still growing their receipts at a compound quarterly growth rate of 9.1%. It would have been higher if I disregarded this quarter because the previous quarter they did see 1.6 million. So if they do increase their cash receipts over the next few quarters, we'll probably see that growth rate a little bit higher than it is now. But still, the main thing is receipts are growing, and I think the main thing I want to see with MicroX is them continuing to increase their cash receipts and then maintain a control over their costs because that's the main thing keeping them back right now. Onto the charts for MicroX. I'll just look at one chart, and that's the 6-month daily chart. Not a lot has been happening with MicroX over the past 5 months. In fact, the share price has been going sideways, trading between a range of about 45 cents and 32 cents. It looks like there is a potential downtrend developing the last few weeks, the last month or so. So there is a possibility we might see the share price fall a little bit further from where it is now. But what I would like to see, if I was to buy into MicroX and their share price didn't fall to, say, 10 cents or something like that, which could be fanciful on my part, would be to start to see a bit of an uptrend developing because the market is forward-looking, and if the market is expecting MicroX to become operational cash flow positive in the next few quarters, they will see that ahead of when we can confirm that, and that's when you might see the re-rating in MicroX's share price. So until one of those two things happens, I'm just staying out of MicroX, not becoming a shareholder at this point in time. It can be helpful and advantageous to be patient in these sort of circumstances. And that's all on this MicroX Appendix 4C for Q3 Financial Year 21. Hope you've enjoyed it. If you are a MicroX shareholder, make sure you leave a comment in the comments section. Maybe talk about why I'm wrong, maybe why I should be buying into this company right now. And even if you're not a MicroX shareholder, You can leave a comment and talk about anything you want, and make sure it's not destructive criticism if you do have any criticisms, because I don't learn from those sort of criticisms. You don't learn, no one learns. So any sort of criticism should be constructive, so I, in particular, can learn from them and grow as an investor, as a person. So that's all for this video. I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. Have a good day. Bye.